If you ever looked at your business and thought, we seem busy, we seem profitable, but it doesn't feel like we're actually making money, you're not alone. This is one of the most common frustrations I see with business owners. Revenue is coming in. The business looks active. Sometimes the profit number even looks okay. And yet there's this constant feeling of uncertainty. Money doesn't seem to stick. Decisions feel risky. And you're never quite sure whether the business is actually working the way it's supposed to. That confusion is not a mindset issue. It's not a discipline issue. And it's definitely not intelligence. Most founders are taught to look at the wrong signals. In this video, I want to help you answer one simple question clearly and calmly. Is your business actually making money, or is it just generating activity? When people say my business is making money, they usually mean one of three things. Sales are coming in, the business looks profitable on paper, or there's money in the bank. The problem is none of these on their own actually tell you if your business is making money. So let's define this properly. A business is making money if it actually generates enough cash to pay for its sales activities, to pay for its costs to keep running, and everything, including your salary as the business owner. Not just once, not in a good month, but repeatedly without stress and without distortion. Making money isn't just about growth. It's not about optimization. And it's definitely not about clever accounting. It's about whether the business can sustain itself and the people inside it calmly and predictably. Most confusion comes from relying on signals that only tell part of the story. Let's talk through three of the most common signals. The first one is revenue. Revenue tells you that customers are buying, and that's important. But that's all it tells you. Revenue doesn't tell you how much it costs to deliver, how much it costs to operate the business, how much strain your business is under, or whether any of it is actually sustainable, that it will last into the future. Revenue measures movement, not value. A business can grow revenue aggressively while at the same time becoming weaker as a business. Next, profit. Profit feels more serious. It feels more grown up. But accounting profit is still just a snapshot based on rules, timing, and assumptions. Profit often ignores whether the owner is underpaid, whether reinvestment is being deferred, whether cash timing is causing stress. So a business can look profitable on paper, but it's slowly eroding the value from the systems and the people inside it that are required to keep the business alive. You need employees, and you need to pay for software. You need to pay for marketing. And if you're not generating enough cash to pay for these and to pay yourself, that business is slowly dying, even if it's making a profit on paper. And then there's the bank balance. This is the one that people trust the most because it feels real. If there's money in the account, things feel okay. If there's no money, panic sets in. But cash is heavily distorted by timing. A large invoice or delayed payment or missed payment can create a sense of financial health. You look at your balance, it looks big. Or on the flip side, delayed payment from your clients can cause panic and unnecessary fear. So cash without context is emotionally persuasive, but it's structurally unreliable. So if revenue, profit, and cash balances can all mislead you, how do you actually know if your business is making money? How do you know the truth? So here's a simple way to think about it. After the business pays for its operating costs, the reinvestment it needs to keep sustaining itself, and a fair salary to the owner, is there repeatable surplus left? Not theoretical surplus, not potential surplus, actual surplus without stress, scrambling, or pressure. A business that's actually making money usually feels boring. Why? Because it's predictable, it's calm, it's unsurprising. That's not a flaw. That's what economic reality feels like. Here's where I see founders misjudging things often. They call reinvestment profit. They underpay themselves to make profit look good. They use tax profit as a measure of health. They don't account for the taxes they need to pay and assume they have cash in the bank. And the big one is they assume that growth, revenue growth, will fix everything. It's important to understand that none of these are moral flaws. These are just common misunderstandings. I see this pattern a lot with business owners. A business that's growing, that looks profitable, is busy, but the founders often feel on edge. They feel like they are running paycheck to paycheck or month to month, and they're going to fall off a cliff very, very soon. But when we slow things down and actually help them understand what making money actually means, nothing changes overnight. The revenue doesn't suddenly double. The workload doesn't just disappear. They get clarity on what making money is, and they get focused. Decisions are no longer emotional. The business doesn't feel fragile anymore. And money stops being something they chase and becomes something they manage. And that shift comes from structure, not effort. If any of this is resonating with you, it's important for me to state this. You're not bad with money. It's just that you've been taught or you've misunderstood the signals. Revenue, profit, bank balances are the common signals that people look at to try and understand their money. Once you realize that profit doesn't tell you if a business is healthy, the next natural question people have always comes down to cash. Now we're talking cold hard cash here. How does it move through the business? And why does timing matter? And how does that work? If you want help understanding if your business is actually making money, that's exactly the kind of systems that we help our clients with. Check the description for some free resources to help you with that, including a free consultation where we can talk about your business and your numbers specifically. I'll see you guys on the next one.